Hiya, welcome to my Compound Life. This is a channel where we build assets, we build habits, and of course, we build freedom, and that should hopefully be financial time freedom for you and I. Okay, so I'm your host, Jonathan. In today's video, what I want to talk about is, of course, gold, silver, everything just hits a record all-time high. And potentially, Bitcoin could be next. So if you find this interesting, let's get started. But before we do so, hit the like, hit subscribe. Drop in the comments if you are my 27th to 30th of subscribers. Let me know who you are. Or whenever you like, drop me comments throughout the video. Just let me know your point of view. Okay, so today I want to break down something fascinating that I just learned from an awesome video by British HODL, right? So he's a YouTuber and a Bitcoin maximalist. So he dropped something deep macro insight on why gold has been rallying hard lately and why Bitcoin might lag a bit, but then could have a potential to explode. So let's unpack what he said, how it could actually works, and why it matters for you and my portfolio if you're investors of Bitcoin, and of course my kind of balanced take to it. Okay, so what exactly did British HODL said, right? So British HODL core thesis is this: gold isn't pumping because the systems is collapsing or some doom to gloom narratives. Instead, it's sniffing out a big upcoming change in the US banking rules that kicks in January 2026. So that's very, very quick. That would be next month. He's talking about the Supplementary Leverage Ratio, short for SLR. So I'll be calling out SLR constantly throughout this video. So basically, it's a rule that limits how much big banks can leverage their balance sheets. So back in COVID period, banks got a temporary exemption to load up on treasuries and keep the economy flowing. Then the whole thing got ended in 2021 and tightening things up, and coincidentally around when Bitcoin momentum faded during that cycle. So starting very soon, next month in January 2026, optional opt-in and mandatory by April next year, regulators are loosening the enhanced SLR for the biggest banks. Okay, I need to stop the, hang on, let me just, yeah, that's better. Let's stop the notification. I think I've got someone that complains about too noisy notification before. But anyway, coming back, right? So now in January next year, 2026, optional opt-in January, but mandatory by April. Regulators are loosening the enhanced SLR for the biggest banks. So in British HODL's view, this lets bank buy and hold massive amount of US treasuries without heavy leverage penalties. Okay, so you can kind of see why, right? So in a way, this is kind of like a stealth quantitative easing. So obviously, US Fed Jerome Powell, he mentioned that there would be no quantitative easing, right? So this is kind of like a stealth quantitative easing without having to print a load of money, right? So this stealth quantitative easing will be injecting liquidity into the system without Fed directly printing money or cutting rates, right, aggressively, right? So this is why have mentioned to you guys that do not have too high hopes for rate cut for mass QE, right? Because in fact, it might actually not come at all, right? So you need to, rather than trade based on social media hypes, right? You need to be realistic on how you take in such information and devise your next steps, right? So this is why I'm still thinking that potentially we will be entering a bear market next year very soon. There could be some dead cat bounce, but probably not an all-time high. Okay, so that's my take. Interesting to see how you read this information, and let me know. Drop a response in the comment section. I really look forward to to interact with you guys. Okay, so this is why Jerome Powell has not been too dovish in his recent speech and basically kept the number of rate cuts for next year, right? Because Fed knows that they cannot infinite amount of printing of money excessively into an already performing market, right? The stock markets are performing. Bitcoin already reached the all-time high of 126,000, right? Because if they do, it's going to cause uncontrollable inflation, right? So they're coming up with new and innovative approach. And to be honest, it might not be to you and my liking, okay? So why does this matter? Or what's the implication of doing that? So the US has a huge $9 to $10 trillion Treasury debt financing war in 2026. So with this SLR, it can help the US banks absorb that supply smoothly, expanding their balance sheets and flooding the system with liquidity, right? So that's something that's currently what we need in Bitcoin. But take note of this, it's not going to be mass kind of quantitative easing, okay? So gold being super sensitive to fiscal stuff and incoming liquidity signal, that's why gold rallies first as a regime change indicator, right? Bitcoin, which British HODL call a risk-on asset, further down the risk curve, waits for the actual liquidity to hit, then it moves sharply higher. Okay, how high? No one knows. Will this be a dead cat bounce or another all-time high? We can only hope. Okay, so that's my take for it so far. He kind of also predicts Wall Street booms first. So early 2026, there'll be bank expansion, risk asset like stocks and shares, Bitcoin will take off, confidence will build, then the Fed can cut rates later to help Main Street. So all setting up for, feel good economy. So all setting up for, for the midterm for Donald Trump. From his perspective, his bottom line was this is bullish as hell for Bitcoin. And his recommendation would be secure it now before liquidity accelerates. Okay, so this is where I need you guys to be very, very careful because, of course, non-financial advice. So do not go all in. But I need to address this point because he's hinting due to the SLR loosening and hence gold 2025 rally up over 60% year to date. To about 4,300 USD level. He was hinting and assuming that it was all driven by central bank. It was all driven by because of this SLR loosening, right? However, in reality, the gold price, it's due to central bank continuously buying, right? China buying, geopolitics buying, lower real yields, and kind of like a safe haven flow. So this SLR tweak might add a small supportive note to the gold buying, but it's not the main driver, right? So from that perspective, I don't foresee Bitcoin to go the same trajectory as gold. Okay, so let me further explain how it actually works, right? So let's break it down how this SLR change really works in a more simpler manner. Okay, so think of the bank's balance sheet like a giant warehouse, right? So the SLR is basic rule that says no matter what's inside your warehouse, you can house all of the safe stuff like the government bonds or risky loans. You need to have a certain amount of your own solid cash cushion, right? High quality capital to cover at least 3% of the total space everything takes up. So it ignores how safe the items are. Everything counts equally. So which prevents bank from overloading on hidden risk, right? The enhanced version for the biggest, most important banks, the ones that are deemed too big to fail, adds an extra cushion. So previously, a flat 2% at the parent company level, total 5%, and the other 3% at the bank subsidiary, total 6%. So this was like forcing these mega banks to keep even more cash locked up in a safe as a safety net, right? So that's the old setup. Now, with the new change, instead of a one-size-fits-all extra cushion, it's now personalized based on how systematically risky each bank is. And that's obviously measured by their GSIB surcharge, a score based on size, interconnectedness, etc. Okay? So they only need half of that risk score as the extra buffer. So for the actual banking subsidiaries, it's capped low, max at 1%. And why does this matter in a very plain terms, right? This loosening frees up billions in locked capital for these giant banks, right? So estimates suggest greater than 2% reduction overall at holding companies, but at 28% at subsidiaries, right? So in real life, what it means is banks face less penalty for holding super safe asset like US Treasury government debt. Previously, stuffing the warehouse with safe treasury still ate into their cushion requirement just as much as risky stuff. So this kind of discouraged them from buying or holding a lot more, right? So now they can hold a lot more and have more money to buy a lot more, right? Now they expand their balance sheet more easily, buy more treasuries, lend more, or intermediate in markets like helping with government debt auctions, refinancing, especially refinancing that massive 9 to 10 trillion that needs to be repaid. Repayment, right? So it's a subtle way to inject liquidity into the system without the Fed directly printing money. So no full exclusion of treasuries like temporary COVID rules. Banks act as a middleman more willingly, supporting smoother market and potential credit growth. And on the downside, slightly less ultra-conservative buffer against crisis, but regulatory say it makes the rule a true backstop, kicks in only in extreme rather than the main constraint, aligning better with actual risk, okay? So overall, it's a technical tweak to make big banks more efficient and to handle low-risk activities. So it's definitely key for treasury markets and economy without drastically having to cut off their safety nets by doing crazy rate cut as well as money printing. For Bitcoin holders, investors into growth stock, this could mean indirect liquidity support starting early 2026. Banks with more rooms to grow balance sheet might feel broader risks on flows down the line. Bottom line, don't expect immediate further rate cut, right? So don't expect mass QE. So this could mean easier debt refinancing for the US government, more stable treasury markets, and a more modest liquidity tailwind starting early 2026. So for us, if we're on risk assets, so Bitcoin in this case will be considered as risk asset, we would definitely benefit from this liquidity, right? Because of the broader rallies, higher confidence, etc., right? And especially when liquidity flows accelerate, it could fuel next leg up, right? So that can potentially be the relief rallies that can easily bring us back to the 50 days moving average of 95K, right? So my before video, 50-day SMA were around 105 or 104. Now it has definitely dropped back down to about 95K, right? So maybe further rally can probably bring us back to 100, 110, right? At most, get back to the all-time high of 126, right? But I don't anticipate more OGs or whale money coming back until the next cycle, right? Until the Bitcoin bottom, okay? So that's my take to it. And I just want you guys to be a little bit cautious in terms of, what exactly is going to happen. So yeah, I think so. These are all theories and assumption. It's not set in stone that Bitcoin will do this, Bitcoin will do that, when this happen or that happen, right? So take in this information and start to plan out your trade on what you might want to do before you enter Bitcoin or before you want to get out of your trade for Bitcoin. Okay. We'll never get back to easy money, put it this way, like during the COVID period. Perhaps we can get some liquidity injection only if Trump's stimulus checks kicks in. Okay, so if this apply, some liquidity comes in, so the SLR, right? And then Trump's stimulus checks comes in, we may get some injection, but this will not be like the COVID period quantitative easing, money printing. Okay, so bear that in mind, right? So do not be overly bullish with what's about to happen. Okay. Yeah, so I think closing, right? Don't go all in. Pound cost average. Have enough dry powder for the next cycle. Okay. I don't foresee this, I don't really foresee a super cycle. Everyone talks about a super cycle. They have the assumption that ETF will be buying like hell and there will be like a super cycle for Bitcoin. I don't foresee that, right? So be very cautious. Have a bearish sentiment now that this cycle, this Bitcoin cycle, has already ended, right? That will be, 70 or 80%, okay? And 20% for an extended cycle, right? So in conclusion, please consider not to go all in. Okay, so let me know your thoughts on this. Drop a comment, hit the like, hit subscribe, and I'll see you in the next video. Okay, bye.